Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. I represent TradersWay.com, an ECN that gives traders access to Forex, but also energies, metals, indices, and so on and so forth. We do these sessions every single day, Monday through Thursday at Forex.today and on Fridays at FX Street. They are strategy sessions. They are live, and you're welcome to attend if you're not attending this live now. Just go to Forex.today and register. That's it. Pretty easy, right? Yeah. Hope to see you there. Hope to see you online. Did anyone attend my event at fxstreet.com on Friday? Yeah, cool. Well, thank you for your loyalty. I appreciate that. It's good to see you back here at Forex.today. Already a whole bunch of ideas posted. It's amazing, huh? 16th of November. Wow. Amazing. So it looks like at least a dozen trading ideas already for today. So thanks to the analyst team. Well, it's a Monday, so what we often do on Mondays is start by reviewing the calendar. No, just a regular old trading session day. Regular trading session day, Joseph. Uh-oh. Uh-oh. Okay, I changed my mind. I don't want to look at the calendar. Let's just go to the COT report. Hey, makes my job easy, I guess, right? Except I got to figure that out. All right. This is Euro on Tuesday of last week. You see any significant change? A lot more people shorting. No change in bullishness, but a dramatic increase over 2 weeks on the short side. Cool. So would you say that the euro drop is legit? Yeah. Now it's interesting how before we had a euro USD rise of significance, several hundred pips, and the one thing that we could tell is it wasn't legitimate. No one was actually buying it. It was just bears getting out for profit. Price went up, and I said, no one's buying it. No one's buying it. Get ready to sell. What do you think? When the bear back in, and I think I'm still in the trade. 280 pips still. So that's interesting, right? Now, I suppose if we're going to have euro up, we need to talk about the terrorist attacks in Paris. And what it means to an investor is that it's not good for business because the likely reaction to the Europeans is to close their borders. Fine. Okay. So if they do that, that doesn't help business. It might not hurt. I mean, you can argue. I mean, it's just not good for business. What's good for business is more people coming in to buy your products and services. So putting up the door or putting up walls says, all right, whoa, whoa, whoa. And it's not good for business. And especially if you're looking at, over the next couple of years, right, versus the next couple of weeks. Now, if people stop going to cafes and stuff in Paris, that's going to be bad for the Parisian economy. So, and that's a micro level issue, but I'm talking more macro. And anything not good for business is not going to help the European recovery. Oh, is this the old stuff? Okay, well then I'll just go on to charts. Sorry, guys. Is it? Are we off a week? Probably wouldn't matter anyways. But so anything not good for business is not going to help the European economy recover. So what that will probably do is give the ECB consideration for either additional quantitative easing, but maybe not likely, but let's say that is a possibility. Different types of bond purchases, which we know have been discussed. Maybe somehow some additional interest rate cuts, or just quantitative easing for a longer time. And that's probably more likely, where they'll say maybe next year. I don't think they're going to reference the terrorist attacks, because then you give the scumbags power, right? So what you're going to likely just say is, you're looking at the risks, you're looking at this, you're looking at that, and the committee has decided to keep quantitative easing all the way through 2018 instead of 2017, something like that. Okay, so what all that means is euro down. So if we go to, let's close all this. Well, maybe we'll talk about it later, just remind me. But very often in a time of crisis, the domestic currency is going to gain in value. Why would the domestic currency gain in value if there was a terrorist attack? Borders go up, may not be very good for the economy. Why would that make the domestic economy go up? Well, yeah, you're hunkering down for a war, basically, whatever you want to call it, right? If you're putting up your walls, right? You're also bringing your money home, and you're hunkering down for a cold winter. Okay, usually you just pull everything in, right? Bring everything home. And well, we haven't seen that. And one reason is maybe Europeans don't want the euro. But another one is it may be the market suggesting that the ECB is going to continue to weaken the euro. Oh, I hate when I click that button by mistake. Wish there was an undo for that. So anyways, so that's how one might read it, to say, well, that's interesting. The euro didn't get strong. I'm still looking at the, okay, so the euro didn't get strong. And so maybe the euro is being valued not necessarily by supply and demand of the economy, but by monetary policy out of the ECB. Would that be a reasonable assumption or a way of stating it? That the valuation of the euro is not set by the supply and demand of the economy, but by the monetary policy of the ECB? I mean, that's one test. We don't often get a test like that, right? To test what's creating the valuation. Well, that's interesting. It's not going to change any policies at the ECB, and the ECB sets the price. All right. All right, so this is Aussie dollar. I traded this live when it came out late last week. What was it, Thursday? Thursday night, Friday morning, depending on where you are in the world. depending on where you drew your fib. Okay. It bounced. This was the Aussie jobs report, and it was amazingly good. But the Aussie jobs report is quite volatile. I mean, way more than non-farm payrolls. So it was a glimpse of hope of positive global macroeconomics. Remember my last trade on this, we were long in here. So not the most beautiful trade in the world, but if you, let's say, and I think I discussed this with somebody at the time, what you can do is throw down an order at old resistance, which might be support, and put your stop below the lowest low, and you just take a walk. Am I saying Aussie dollar? I meant Aussie yen. I apologize, but it's all based off Aussie jobs report. Okay. So again, this was Thursday. It took a long time, but it's interesting that, it came down, it tickled it, and then it made a high, tested this area here, which would be the new short, right? If you're a bear. Came up, tested it, respected it, came down, and then broke it. Aha! WWBD. What would what would a bull do? A bull would look at that bullishly. Okay. And so you get the next wave. If you want to look at it as waves, you'll see that there's a wave here, and down, and then up, and then down, and then hopefully up to the next level. And you get the micro and the macro congruent if you're bullish. Okay. And like I said, if you don't know what my bias is, we were long here. That might have been that same day that James said, well, why don't you hold these trades so you can show us them? So I did. I think this came back and knocked me out with 100 pips profit. And the other one I left, on the Euro USD, I left that one. And that one's still up about 300. Okay, so let's dive into that Euro USD, I suppose. Yeah, Bob brings up a point. Yeah, we'll go with Bob's point actually before I forget about these things. Bad news out of Japan. They missed their numbers again, and so that's bad, right? So what happens to the yen? Why does it do this? Why does yeah, interesting, huh? Now let me back out. I want to remind you that I already had set you up to buy this. Okay? You see the gray area? That's the buy zone. And as you can tell, it was probably a week before the news, right? So it's something similar to what we talked about in October, is that the Bank of Japan is just not hitting their target. They may have to do something unique and possibly radical to get themselves back on path. So yes, additional quantitative easing. And you know what's interesting is, uh, you know, I'm a fairly confident person, so some people will say I'm an arrogant prick. I don't think so. But you know, let's test the hypotheses. I think central banks should hire me, and I'll tell them how to run their central banks. See, I look at this and I say, look, it's not Japan's fault. What does this have to do with Japan? Hey, throw some more quantitative easing. I mean, what is that going to do? Again, it's like, you know, it's like giving more Brussels sprouts to the kid that doesn't want to eat Brussels sprouts. Well, say, well, I'll make Brussels sprouts cheaper. I'll give you twice as much for the same price. Like, I still don't want the Brussels sprouts. So, anyways, what I'm thinking here, when I see Japan, of course, this is USD yen, when Japan is not hitting their mark, I think, well, what kind of economy is the Japanese economy? And some would say, hey, it tends to be an exporting nation. Okay, great. Who does it export to primarily? Well, uh, China, actually, which is interesting, isn't it? The United States and Europe, I would say, are probably the three biggest trading partners. Okay, fine. How's the United States doing? It's doing fine. But remember, 70% of the U.S. economy is buying U.S. economy goods and services. This is one reason why the United States is a reserve currency. America, and trust me, Americans think this way, we don't need anybody, yo. Um, they can survive on their own. You got it. So China, United States, South Korea, Taiwan. Yeah, okay. But it's interesting because China, South Korea, Taiwan, they're all kind of in business together, right? Well, and then, well, it depends EU. Is it supposed to be there? Is it not there? But thank you for posting that, Kenny. But the idea here, guys, is that one of their trading partners, the United States, is doing okay. It's not doing fabulous, but at least the reserve currency is fairly strong, and it can buy from Japan and China and other exporting nations with their strong dollar. Okay, cool. So that's good. Well, what about Europe? Right? So Kenny grabs, you know, a list of the largest trading partners with Japan, and it's not even on the list, right? Well, that in of itself is a problem. That's 400 million people not buying stuff. And I think that's the Japanese problem. And because of that, let's say, let's just take 400 million, you know, pretty wealthy people compared to, I mean, you could go to some countries and get 400 million poor people without any problem. By poor, I mean $1 or $2 a day GDP. I mean, that's nothing, right? It's caveman time. So, you know, you take 400 million wealthy Europeans, wealthy relative to the rest of the world, and you diminish their wealth, it's a big problem. So, um, they're not, their domestic economy is not using things like natural resources and stuff. So we have this, we don't have much demand for oil, plus we have this supply issue now. So we have too much oil and not enough demand. So, you know, commodity prices come down, copper comes down, wheat comes down, just everything comes down, right? But that's also part of calculating inflation. So look, I look at it, and Japan's not hitting their numbers, but what's Japan supposed to do about it? Weaken its currency, right? But is that going to make some guy in Marseille buy a Toyota? Maybe, right? Make some, you know, some girl in Barcelona buy a Honda? Yeah, it does, but does it create demand? Maybe, I suppose. But if you're not buying a car anyways, Bob, because you don't have a job, right? right? So you know, so I think, you know, and maybe Bank of Japan's doing this too. They're like, dude, we're not going to do more quantitative easing. But if you look at this chart, the way that the market reads it is, okay, Japan's still not hitting their numbers. Bank of Japan's got to do something, or the government of Japan's got to do something, maybe a stimulus package, whatever. But something's going to happen, and it's going to be positive on the long run. True, but where does the money go, Kenny? Where does the profit go? It gets repatriated back. But I will agree with you. It's not a good example anymore because I think it's BMW. Yeah, BMW makes more cars in the United States now than it does in Germany, and I think they make all of their X5s in the United States, and then ships them back to Germany to sell to Germans. I think that's cool. So in some measurements, BMWs are Americans. And what's weird, what Chryslers are now Italian? I don't know. It's a very confusing topsy-turvy world. It's a very I'm very confused. Do you buy a Lamborghini if it's really a Volkswagen, right? So anyways, so yeah, so anyways, there's the reaction. Bad numbers, and it's funny because a weak yen is actually a good response. So I don't know if you get that as well, but that it all has to do with the foreign exchange market. Wonder if I can. I don't have a drawing tool. Let me fire up my drawing tool. Mm-mm-mm. Ignore, ignore, hang on. Recording tool problem. There it is. Will this draw? Yeah, okay. So let's say you have imports. Okay. And let's put a currency here. Yen. This is a quantity. So if the yen is worth a lot, so let's say the yen goes up to here, they can afford to import more foreign goods. Following me? Exchange rate 1. Well, what about exports? And this is what we're talking about now, right? Demand for Japanese goods. So if the currency is down here, let's say exchange rate 2, you get this and you get this. So if the Japanese yen is weak, the Japanese import, because these are imports, they import very little and they export a lot. If the exchange rate is high, okay, Japanese goods get expensive to foreigners, so they export less and they import more. And then here's the equilibrium exchange rate where you know there's trade balance. But of course, Japan doesn't want trade balance. They want right. They want to export more than they import. And the United States is the opposite, right? Their currency is usually high. So let's make this the U.S. dollar. They usually export some, but they import a lot more. And Japan is down here where they'll import less but export a lot. And that their central banks will need to sort of manipulate the market because the market's always going to want to come back to the equilibrium point. And so each of these central banks, the Fed and the BOJ, need to manipulate the markets so that they get the desired trade balance or trade deficit, right? Trade surplus or trade deficit. And so anyways, this is actually, good news for Japan that their economy sucks. So the market is reading into it, right? So if the economy was collapsing, the Japanese would bring all their money home, right? And the yen would get really strong, right? But at least we see that that's not happening, and that some are still saying that the Bank of Japan's going to have to do something. They're going to keep interest rates zero for longer. They might actually add to quantitative easing, which would depreciate their currency further, and that it's a good idea to borrow Japanese yen. And then once you've borrowed it, you invest it somewhere else, like perhaps the United States, right? Of course, I've drawn that for you too. I've drawn that chart for you to prove that as well. Where you have, here's domestic loanable funds. Here's loanable funds from the domestic plus the foreigners. All right, so what's happening is it's this area in here. Okay, so if this is the equilibrium world rate for interest rates, now the world rate for interest, and I was just showing you that Japan wants to keep their interest rates lower than the rest of the world because they want to export. So there's the world rate. Japan wants to keep, it should actually be off the equilibrium point, sorry. So if Japan wants to keep their interest rate low, what happens is foreigners actually come in and they borrow this in here, but okay, the domestic supply of funds and the foreign supply. So they're coming in, they're taking this money, and then they're taking it out of Japan because they're borrowing it. They're borrowing those loanable funds at the lower interest rate because Japan's interest rate's lower. Okay, lower. Let's say here, lower than the world rate. So the foreigners are coming in, borrowing it, and then taking it out of Japan and investing it into a higher yielding, investment somewhere else. And so that's why you get this action here. Line 1, line 2, loanable funds. So, just loanable funds, the money market, if you want to look at it that way. Okay, and foreigners are coming in and they're borrowing they're borrowing Japanese financial assets, or they're taking that available money out and putting it somewhere else. And that's what we're in the business of, right? When money is flowing. Well, why does money flow? Well, someone says, "Oh, well, I can just go to Japan, borrow their money basically for free, and there's a high probability that while I have this asset, it's going to lose value, so I'll pay it back with cheaper yen." Just that will make you money. Just borrowing it will make you money. But then you're like, well, I'm not just going to have this yen sitting in a bank account. What if I put it in Australia and earn 2% on top of that? Okay? And that's what creates the money to flow from Japan to Australia. And what effect does that have for the Japanese yen if foreigners now are borrowing the money and taking it out of Japan and exchanging it in the foreign exchange market? Well, supply of yen goes up globally, the value of the yen goes down, and guess what? Is Japan happy or upset? They're happy because that's what they wanted. That's why they are doing things to keep their interest rate lower than the world rate, because it promotes the flow of funds globally. something, right? Anything, Kenny, anything is better than earning zero and being guaranteed to lose money on the valuation, exchange rate valuation changes. So that's the whole point. All right. So just to look at euro from previous plans, we're just kind of hovering around. Haven't really made a lower low. Yen, let's clean this up, look at it again from the same point of view. So this area here, I'm showing a trade plan of preparing to buy it at a 50% retracement of this move to down and to up. You can see it came down a little farther, but nonetheless, it's always interesting to me. You can see this area here was the previous resistance. We're not that far from what became support. And I mean, that's just how trading works. So you always, if you're a bull, you should always be identifying them in the next 2 or 3 levels of support in which you may want to buy. I'm always doing that, right? I'm always doing that. Find the next level, find the next level. There was one here, there's one here, there's one here. I don't know if I'm going to buy, I don't know when I'm going to buy, but I know at what price I'll consider it at all times. Where was that channel we had for this one? Let's see if we can find that. Is it the scan yen? No, it's not that one. Maybe it's pound yen directly. We have a nice channel chart for this pair somewhere. Of course, I can't find it. Pivots, maybe. Pivot yen. Oh, too bad. I've lost it. We have a beautiful little pattern somewhere on this beast. I guess I'll go back then. Okay, but I think you remember I'd shown you how it would go up, 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 down, up, 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 down, like fast, right? Hard and fast. Up, 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 down. So more recently, pretty big drop. Falling knife scenario, huh? Amazing. So go out maybe a 4-hour and take a look at it from there. Well, if you're a bear, that looks really good to you, doesn't it? Hmm? If it rolls over and drops here, it's going to be a big deal. Right now, it seems like up is the play. But, murder was the case that they gave the beast 187 still. Look how long we've been at the 5. So I'd say, USDN seems to be the big winner. Just kind of looking around what else to look at. It's all very much the same. Yen is very, very, very weak. Even Euro yen's way up. We know Euro's not strong. Do you have a currency that you want to do a Kiwi? I'm all right that. Kiwi dollar or Kiwi yen? I'm going to pick dollar. Okay, so I have it coming back to either this area or this area, which is interesting. So I picked the 618. Now, if you follow the current price line, follow it, follow it, follow it, follow it, follow it. We're right on the old support. So if I was a bull, I would prepare. Now it's a daily chart and it's blood red. All that says is get ready. It may be difficult. It may not be a quick, easy trade, but how do you mitigate your risk? You take your time. Wait for a pattern. Okay. So if you wanted to buy it, I would start with Kiwi yen. If I wanted to sell it, Kiwi dollar seems to be the play. So can you sell here? I'd be extremely cautious. Like if you were going to sell it, you could have sold it, I mean, a million years ago, right? So if you're going to sell it now, you're hoping for a retracement, maybe off that 21. That's just a 15-minute 21. I'd squeeze some more time in here. I'd look at it at least from an hourly point of view. And so right now we are riding the hourly 5, which is cool. Okay. But at some point it should bounce and eventually meet up with this 21. Okay. So doing something now, I think you're a couple of hours late. At the very minimum, you'd get this giant bearish engulfing candle, which took an hour. Then the 3A2 retracement. Okay, that okay, but if you're going to be a bear, that's an all right thing on this pair because I'm long U.S. dollar. That's my bias. So yeah, you had some shots here. Several hours ago, you had some pretty good chances. You are at support, my friend. I don't care how far you think it's going to fall, but I don't care how far it actually does fall. You're either in control of your trading or you're not. And if you agree with me that we're at old resistance, then this should be current support. Then you would be a fool to sell here. You at least make a deal with yourself and say, I'll at least wait for some sort of trade setup on a 15-minute chart. Okay, like at least, like you can't wait for this, really? Then who's in control, the market or you? Well, Rick says something, if interest rates in the United States, well, but look, everything is in play ahead of time. So the dollar is already priced in interest rate hikes. Okay, and so that's what's in play. Okay, and I think this plan that I have here, I'm showing you the 3A2 and the 618, that if you're a bull on Kiwi and you think this pair will go up, you should then open up Kiwi yen. Okay, so this is a trade plan, except there's no way in hell I'm going to sell the US dollar. Just absolutely no way. So I remember I was teaching you this, how to just use correlation and having bias for currency pairs and stuff. So you could say, well, if the Kiwi dollar goes up, boy, they imagine the Kiwi yen. Okay, so you see it, you might see a pattern on Kiwi dollar, flip over to Kiwi yen and prepare. Maybe there's the channel. But and then you just wait. Okay. And if you're near a little buy zone, so we're on Kiwi dollar support, right? Go back in your mind, right? We're at Kiwi dollar support. Are we at Kiwi yen support? Yeah, although scary. The reason I say it's scary is yes, it's a weekly pivot profit zone. Okay. But and that's a big but. But we're making lower lows. So I'm not a buyer of this. It's funny, even though yen is weak, Kiwi at the moment is even weaker. But at some point, right? At some point, there may be support. So my job here is fairly simple, and that's what I like about currency trading. If I've made a decision, then now I just need to pick areas I might be interested in taking action. It looks like they're monthly pivot points. How funny is that? Sweet. Okay. And I sit here and I think, all right, maybe if I get a reversal pattern here and we get back above the monthly central, I might start buying. So what if it did this today, guys? It reverses in the daily reversal pivot profit zone, heads back up to the 21, but little shake and bake, breaks it and goes to the 55, comes back down to the monthly, and then I buy it. Maybe it comes down a little farther, kicks off this area, and off we go, hot to go, HOTTOGO. Okay, you see what I mean? And I can afford, since I'm in control of my behavior, right? If I'm in control of my behavior, I can say, well, I want this, but I don't want it now, not this way, right? Yes, I want to get married, but a shotgun wedding isn't what I had in mind, kind of thing. So, you let it, break the 21, go to the 55, show its vulnerabilities, and then kind of buy in here somewhere, ideally keeping it above the monthly central pivot. And now I'm bullish in a bullish market. In a situation where I'm earning a huge carry. Okay? And that, my friend, is saying, you're a pro. And a pro decides how to invest the money, not the market. Right? So like, what would an amateur do? First of all, they're not using pivot points, right? They're going to see this giant engulfing candle. And then what? They're going to sell. Now, if you were going to sell, you can still wait for the pullback and sell here. Okay? But a failure of that would change the market from bearish to bullish, and that's what I'm waiting for. I'm waiting for the change in trend. Yeah, no, Kenny, you could totally sell this, just not now, right? At the very least, you could say, okay, I'm a bear. I'm going to sell at resistance. I've previously established resistance here because see how it used to be support? Now it's resistance. All right, so the most ideal scenario now for a bear in control of their behavior is to wait for the retracement, throw in the psych level of 80, and then drop it like it's hot. I'm totally cool with that. In fact, under current market conditions, that's much more likely than my reversal that I showed you. Okay. Why? Because the market's bearish. Look at it. 21's below the 55. We're making lower lows, broken through the monthly pivot point. Okay. So, just like I told you yesterday, or last week, I mean, if you're bearish and you break through the psych level, it returns back to the psych level, right? And you sell somewhere between 0, 0, and 20. Does everybody remember that? 0, 0, and 20 is right here. Okay? So I think that will probably work out. But listen to me. If that doesn't work out, the market's no longer bearish. And where, a good trader and a great trader differentiate is the good trader doesn't know when the trend has ended. They might make 5 good trades in a row, but trade 6 and 7 are duds because they kept selling and they didn't notice the change in trend. They should have gone from bearish to bullish and they didn't see it because they were so bearish, and they were bearish 5 times in a row and got paid. Right? But they didn't stop and reverse. The best traders, I think, too, will make 5 good trades in a row and just not even trade 6 and 7. They didn't lose 6 and 7. They didn't stop and reverse because that's even more difficult. And I think on the long run makes it gosh darn near impossible. So I'd rather you say, I'm a bear, I'm going to sell this hard, and then as soon as that bearishness kind of wanes, like let's say off of a pivot point, they take their money and they leave for the day and they go golfing. Those are the good traders, aren't they? Right? The guy that shows up has been waiting for 2 days for the trade to set up, finally sees the setup, works really hard for 3 or 4 hours, and then leaves. I was talking to someone the other day who was going through the process of becoming an investment banker, and he's in London with the investment banking boys, learning the ropes of that department, and they work, no joke, and I've had several investment banking friends, so it's no joke. They work about 18 hours a day, 6 or 7 days a week, and on the weekends they may only work 12 hours a day. But it's just assumed you're not going to have a girlfriend or a boyfriend. You're not going to get married. You're just going to work literally 18 hours a day for 20 years until you can become a managing director. And then they take him to the foreign exchange market just for, I don't know, he just bumps into a trader in the foreign exchange desk in London for the same bank. And this guy shows up 8 o'clock in the morning, works till 5 o'clock at night, turns his computer off and goes home. And the investment banking guys are so jealous. They're like, that guy over in the foreign exchange desk, he makes a ton of money and he has a girlfriend? Holy smokes, like having a life is unheard of. I can't believe it. Really? So, and that's the interesting thing. You don't get paid by the hour in Forex, do you? One of those great things is to work 18 hours a day and lose money. That's a good feeling, right? Yeah, well, still better than owning a restaurant, I think. You can work 18 hours a day, lose money, and have to work 18 hours again tomorrow, and probably lose money tomorrow, and you know it. So anyways, it's a pretty good gig if you look at it compared to what other people have to do. Yeah, well, a dream life to the investment bankers is that the foreign exchange trader actually got to go home at the end of the day, and he didn't think about work either. Like no one was calling him and, oh, where's the contract, or are you done the models, or are you like 24 hours a day, ring, 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 phone ring, ring, ring. I did have an investment banker friend that went pretty high up the ranks, and it was constant. You go anywhere with this dude, just constant, constant, constant. But he made a huge amount of money. Um, but you give up life. You absolutely, definitely give up life. That's the side effect. So for a foreign exchange trader to come in at 8 o'clock in the morning, make some trades, eat lunch, make a few other trades, go home, have the whole evening to like do what you do, go away on the weekends in your beautiful car, right, and your sexy girlfriend, and the IB guys are just like, holy crap. So we got it made no matter what side of the equation you're on, whether you want to be a small business owner and trade out of your own home and have no accounts receivable, no accounts payable. That's cool. But even if you want to work at a bank, there's going to be you're on the right side of the building, so to speak, where you might make just as much as the IB guys, but you have their dream job. How cool is that? Really, it was interesting to hear that story. I haven't heard anyone yet say, um, you know, the foreign exchange has a giant downside. I still don't know what the giant downside is. So, anyways, a pro would say, I've done my analysis, I've done my research. Okay. Now, if you can't say that right there, forget it. Oh, Ron says, why do IB guys stay IB guys? Well, because that's what they know. They have their MBAs. They've been trained to do investment banking work. That's what they know. And there's a lot of business. For example, a friend of mine recently went through a divorce and was dating and would go up to Atlanta to meet 40-year-old women. And so anyways, he goes on this date with this a good-looking, smart, driven woman who chose career over family. So now she's 40 and dating, right? And so anyways, turns out she works at a big bank here in Atlanta. Fine. Um, but it's a regional bank. It's not like a big multinational bank in New York City, right? It's a regional bank just in this part of the United States, the Southeast. It's a big bank here, but you know, if you were in New York City, bankers would look at you and say, "You work for that silly little regional bank?" Right? You're nothing, right? I mean, seriously, as far as investment banking goes, working for a bank that's only in the southeast of the United States, basically Atlanta, you're a peon, right? Except she makes $1 million a year. Now, $1 million a year in Georgia is $1 billion a year in New York City. And for a 40-year-old woman to be making $1 million a year anywhere in the world is pretty amazing. And to make $1 million a year in Georgia, for a woman to make because we know women don't get paid the same. There's not many women that have a job, a job, and make $1 million a year. Maybe they own some businesses or whatever they do, but a job, you go to school, you get an education, you get a job, $1 million a year? I'm telling you guys, $1 million a year in Georgia is huge. Just massive amounts of money. It would be difficult to even spend $1 million a year in Georgia. So why would you want to be an investment banker? Because you could you could have a job in a regional bank that New York bankers would laugh at. And make $1 million a year. Boom! Yeah, that's why. All right. So I think it was Ron that asked, why would you do that? Because it's a hell of a lot of money. And of course, in New York City, you might make $1 million a month. Yeah, well, he got a little ways with that for a while, but it didn't work out. But no, she was the type of person though, like he would try to impress her. He's a beer drinking guy, so he'd try to impress her by going to the store and he'd buy like $25 bottles of red wine to keep in the apartment in case she wanted a glass of wine after work. And she'd say, "Pah! Look at all this crap." She's like, "I can't drink any of this," so she'd go down, to the store and come back with like $4,000 worth of wine just to keep in his apartment. You're like, boom. She's like, "I can't drink this crap. What is this?" So anyway, so why would you do it, Ron? Because investment bankers that are successful make a lot of money. But you might find yourself, 40-year-old woman, not married, no kids, but a hell of a lot of a hell of a great career and $1 million, and Ferrari in the garage, but no baby in the oven, kind of thing. But you have that, you have the $10 million in your retirement account, and that makes you feel better. Okay, so crude oil. We'll do that. And of course, what we started talking about is that investment bankers would be jealous to be to be a forex trader. That's really what the message was. So here we are on this crude. So we opened. Well, let's look at yesterday. Okay, yesterday's high, Friday's high, Friday's low, and it says today's open, but that's really yesterday's close. So if you were a floor trader here, you would see that Friday was a big drop and the sentiment closed bearish, meaning at the end of the day, the market was still bearish. See, sentiment. High, low, close divided by 3 gives you the pivot point, which is here. High, low, close, add those 3 numbers together, divide by 3, and you get this number here, 42.22. Market's still bearish, so what a oil trader would probably want to do today is sell. Okay? So the question is, where would they want to sell? Well, that's your job. Okay, I did the obvious for you, right? Captain Obvious. Sir, yes, sir. The market's bearish. So if you were going to sell today, where would you sell? And that's all you need to do. The rest is just noise. So you look at this area and say, well, how about in here? Okay, it's good. Are there any psychological levels? Where's 43? Let's plot that. I'll show you the trick. You can, oops. Come on, Bubba. Horizontal line properties. You can do it this way. You can just go 43. Okay, we got pretty close to that. Anything else? Well, we don't have things like monthly pivots, do we? Daily, daily, weekly, daily, daily, weekly. So I know there's a lot of lines on here. Let's add some more lines. Boom. Weekly. Man, we already got that. Midpoints, sure. Monthly, yeah, let's throw down some moles. Oh, monthly pivot point at 42.77. Boom, shalakalaka. There we go. So a lot going on in here. I'm concerned that we made a 786 on last week's move, but technically it's still bearish. It kind of tells me though, and again, I'm not trying to predict this, I'm just telling you what this tells me. So if you look at yesterday's high, yesterday's low, and we 786 that, a 786 shows vulnerability. So this kind of shows me that we're going to do this. Okay? But if it does that, then we'll be ready. See, if then. Okay? If it breaks above that area, we might want to buy the dip. You see what I mean? I wouldn't sell at 42. Okay? See, we started the day saying, if you're a bear, you're going to sell. Where do you sell? You sell high, and we identified all the high levels. Well, where were you up here? You can't wait for it to drop $2 and then start selling it. You're going to get punished, right? The funny thing is, I was drawing the sell before the chart caught up. You notice that? I was setting the sell and then it dropped. But, you know, you're supposed to sell up here, yo. So now that we're down here, we're vulnerable. Maybe not on this time frame, maybe change time frames and take a look at it. But I still, if I were me, I would like to sell the retracement. Okay? Gregor says there's too much oil for that. Well, okay. Fundamentally, I totally agree with you. But it's funny what price will do despite the fundamentals, right? You can have bounces in there. People might buy it only because it's 42. You know, there are traders and stuff that will live to try to get the market to, you know, to move against its own will by tricking it and stuff. I don't know. I could just see someone buying it at 42 What's their goal in life? To get it to make 42.25. They make 25 cents. Okay. Right? They might bet $100 million to try to make 25 cents. I think it'll bounce there. I think bears will take profit there. Why wouldn't you take profit here? I mean, it seems to me that this is a reasonable level of support, don't you think? Today's open. Right? So then, at the very least, if that happens, maybe it comes up 42.50, 50% retracement, then we drop it like it's hot. All right, cool. But if you're a bear and you want to sell this, I'm not disagreeing with you. I'm just saying you'd be a fool to do it there. You just would lack all definitions of discipline, right? I've just never heard a floor trader or some other professional trader say, you know, I'm going to wait until it drops all the way to the bottom and then I'm going to sell. Nobody has ever said that, right? You got to write this down on a piece of paper. Buy low, sell high. That's all there is. Everything else is just an algorithm to paint colors on your chart. Okay? Someone's going to take profit here if they sold high. Someone might even buy this here. Does it mean we're going to go to 50? No. But if you're a bear, you need to sell high. That's it. So where would you sell? Well, start doing your job. You need to identify that, right? Is it possible this does it, you know, like a head and shoulders type pattern? Now, it actually wouldn't be a head and shoulders pattern. I need to make that clear, but you know that it does this. Kicks kind of off of here and heads down. Totally plausible. Okay? So if you're a bear, that's what you need to be waiting for. Or you don't sell here and it falls even farther. Is that a bad thing? Not in the slightest. If you wanted to sell it, why didn't you sell it up here where it was an obvious trade? Selling it there is not obvious, and in fact, it's dangerous. You see? The risk. You need to be able to identify risk. So selling there is extremely risky and almost negligent. Selling up here is like free money. Which one do you want? Right? This is where, you know, you're in your canoe and the fish are jumping into the canoe. This is you still in your canoe falling off of the edge of the waterfall. And you're like, man, but the fishing was so good, I just couldn't get out. Really? You didn't see this huge danger right here? Like, yeah, I saw it, but I had so much fish, I just couldn't get out. Sometimes you got to, you know, canoe for the shore, set up camp, and eat your fish. I think we'll leave it on. Oh, we'll leave it on that. Right. We'll have to have that scribed on the side of my temple. Sometimes you have to. Sometimes you have to eat your fish. So, anyways, peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Will you be here? I hope so. Cool. So peace on earth. May the pips be with you. May your profits be above average. Cheers.